Hey, good afternoon, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Thursday, and it's November 14th. We're doing this after the market has closed, so stay tuned here. We do got a couple economic news releases. Tomorrow, the big one will be basically the manufacturing in the New York region. But today we got the weekly jobless claims. So last week we had 341,000 people applying for unemployment. The forecast is supposed to be pretty close to that range, but a little bit lower, and it exceeded that range. So higher than what the forecast was, which is obviously not good news at 339,000. Another one was the trade deficit. Not a huge impact on our market here, but we'll kind of just cover it. The previous, in August, we had minus 38.7 billion, so that's our deficit. Forecast is supposed to be slightly worse at 39 billion, and it came in much worse at 41.8 billion. So September, even that trade gap actually worsened by a good almost $3 billion right there. So obviously not a good start right there. We do got another one. This is kind of an important one. Productivity for the third quarter. We had a 1.8% for the second quarter, and for the third, the projection was 2.4, and it came in at 1.9. So not too far off from the second quarter, but not as what the forecast called for at 2.4. So not the greatest news right there. Let's go ahead and take a look here at the headline news with the stock market closing upwards. They did look a little bit at the data that was provided today, but the big item was Janet Yellen's conference. Janet Yellen standing before conference. They liked what she had to say. They were very comfortable, especially the equity markets were happy. They became more confirmed afterwards that they feel that they'll be in positive hands with her. Basically, she was, they asked her about the bubbles and stuff. She didn't basically, her thoughts were on it that there is no bubble from assets as well as equity markets. Those were some of the concerns out there. Basically, she's did her dovish comments saying that they're doing everything they can to stimulate the economy, to kind of push the economy. Where if you're hawk, you're kind of more concerned about inflation than the economy. Obviously, that's not a concern at this point. So that's sort of right now trying to stimulate the economy is where the focus is, and they like what she had to say. So let's take a look and see how this all affected the bond market, what interest rates today. We had a nice improvement. As you can see, yesterday we had that jump upwards. So even before about half hour when we did the report yesterday, before close, it closed all the way, basically went all the way up. I think yesterday we were up 9, and then it closed all the way up another 18 or so. So it was a nice day yesterday, and we had an improvement in the rate. So we closed up 25 basis points higher than where we left off yesterday, enough for improvement there. But to be concerned here, we still are on the lower track. So if you take a look here, that we've had this downward trend here, all we are right on this trend is that we're touching the upper portion of this downward trend. So we need a couple more days to kind of get out of this trend and have a few more days just to even show a trend upwards before we're fully out, before we can even say we're out of this downward trend. All right, so right now we're just kind of in the middle of the trend and a downward trend. We're just touching a higher portion of it, so there's still room for it to go downward. So be very careful. If you're floating any loans out there, if you're in escrow, maybe you might want to lock now to make sure in case for any protection for later on, in case maybe it does drop. But just beware. Okay. Thanks for watching, folks. I hope you guys have a great day, and we'll catch you guys tomorrow.